Hello everyone, my name is Pankti. Veni. Welcome back to modules. In this video lecture, we will be going through supplementary paper uploaded by the institute on our website. This supplementary paper gives us a complete detail of tax amendments, direct tax amendments which are applicable for June 2024 exams. So this amendment, the supplementary paper is divided into many parts. Many topics are covered here. What I'll be doing is I'll be dividing entire supplementary paper into sections, different sections, and preparing separate lectures, separate video lectures for all sections. So in this video lecture, I'll be covering 115 BAC, that is rate of income tax, old tax regime, and section 115 BAC. These three topics I'll be covering here. So my next video lecture will start from section 9. Let us begin with. So earlier, before assessment year 24-25, here in this case for June 24 exams, assessment year which is applicable is 24-25, financial year 23-24. Assessment year 24-25, financial year 23-24. Financial year is the year in which businessman works, and assessment year is the year in which we check. We professionals check. Okay. So prior to this, it was assessment year 23-24. Under assessment year 23-24, you had an option at whether you want to choose new tax regime. Again, I repeat, in this exam, June 24, assessment year 24-25 is applicable. Assessment year 24-25 is applicable. In this regime, you have new tax regime as default regime. In this regime, in this assessment year 24-25, you have new tax regime as default year, default regime. Okay. But earlier in assessment year 23-24, it was whether you want to opt in new tax regime. This year, whether you want to opt out of new tax regime. So that is the major difference between 2 years, assessment year 23-24 and 24-25. That is the biggest amendment. Now here, this section which is applicable is section 115 BAC. This section talks about default tax regime, that is new tax regime for individuals, HUF, AOP, BOI and AJP. Applicable to individual, AOP, BOI, HAP or any other cooperative society. Okay. Rate of tax. Under this tax regime, income tax shall be computed at the option of assessee considering following rates. So here in assessment year 23-24, last year it was up to 2,50,000 exempt. Now here also, instead of 2,50,000, it has become 3 lakhs. It has become 3 lakhs. Up to 3 lakh rupees it is exempt. So this tax rates, we are talking about individual, HUF, AOP, BOI, AJP. So what is individual? A natural person. HUF, Hindu Undivided Family. AOP, Association of Persons. Other than cooperative society. What is association of persons? Suppose me and Reliance company. I am individual Reliance company, association of persons. Me partnership firm, individual and partnership firm. So persons, there are 7 persons in income tax. So other than cooperative societies, any persons can come together and form association of persons and then they can work. BOI, body of individuals, 4 to 5 students and me, all individuals together will form a group and will work for exams, will work for lectures. So that is body of individuals. Will work for COVID. That is body of individuals. AJP, artificial juridical persons. So they are legal persons. So it is applicable, new tax regime is applicable to all, irrespective of that it will be not applied to this, it will not apply to this. No, it is applicable to all. New tax regime. Earlier it was 2 lakh 50, now it is 3 lakhs. Up to 3 lakhs it is exempt. So if a person opts for tax regime, rupees 3 lakhs shall be considered as basic exemption limit irrespective of his age, irrespective of your age. In old tax regime, we have age criteria that above 60 you have different slab rates, above 80 you have different tax slab rates. Here it is irrespective of the age, you have 3 lakh rupees exempt. So suppose I'm 62 years old, exemption limit under new tax regime would be 3 lakhs. I'm 22 years old, it would be 3 lakhs. 82 years old, it would be 3 lakhs. So if a person opts for this regime, rupees 3 lakhs shall be considered as basic exemption limit irrespective of his age. In other words, for all category of individuals, that is senior citizens, super senior citizens and other, basic exemption limit is 3 lakhs. So for every year, everyone, the basic exemption limit is rupees 3 lakhs. Rebate under section 87A for tax computed as per section 115 BAC. So what is the rebate applicable to resident individual? So what is rebate? So suppose my income is above taxable, but first time I'm liable to pay tax, then what government does is government gives me a benefit. My income is above taxation, so say taxable limit, say 3 lakhs, above 3 lakhs but below 7 lakhs, then whatever amount of tax comes, or 25,000, whichever is lower, that will be exempt. So rebate under section 87A for tax computed as per section 115 BAC is 7 lakh rupees. Up to 7 lakh rupees if my income is, then 100% of tax, say that tax amount is 24,000 or 25,000, whichever is lower. So entire 24,000 is exempt, no taxation. My income is taxable, but I am not liable to pay tax. I got a rebate of 24,000. 12,500, 16,000, 26,000 is my tax payable. Okay, 25,000, only 1,000 I have to pay tax. So that is rebate. Applicable to all resident individual. NRI, no. To non-resident, it is not applicable. Applicable to all resident individual. Conditions to be satisfied. Total income of assessee does not exceed rupees 7 lakhs. Quantum of rebate lower of the following: 100% of tax liability as computed above, or 25,000, whichever is lower. Marginal relief is available even total income exceeds rupees 7 lakhs. So under new tax regime, even if your income exceeds 7 lakhs, then also you'll get marginal relief. But under old tax regime, that is not the case. Under new tax regime, even if your income is more than 7 lakhs, you'll get tax benefit, marginal relief. Okay. So they have taken one example. Example is easy. I'll move ahead. Surcharge on tax after rebate. So what is surcharge? Surcharge is nothing, tax on tax. Surcharge is nothing, tax on tax. So surcharge at the following rate is also payable on tax as compared above after rebate under section 87A. So what is surcharge? Surcharge is nothing but tax on tax. Okay, extra amount which you are paying. Surcharge, extra amount. So if your total income does not exceed 50 lakhs, there is no surcharge. So up to 50 lakhs, there is no surcharge. Above 50 lakhs, but does not exceed 1 crore. Above 50 lakhs up to 1 crore, surcharge is 10% of tax. See, you are calculating surcharge on tax amount, 10% of tax. Total income exceeds rupees 1 crore but does not exceed 2 crore. So 15% of tax. Total income exceeds rupees 2 crore, 25% of tax. Subject to marginal relief, where the total income includes dividend. Total income includes dividend. Any income chargeable under section 111A, 112 and 112A. So what are these incomes? Short-term capital gain and long-term capital gain on securities. The surcharge on the amount of income tax computed on that part of income shall not exceed 15%. Then whatever is the income, for dividend, share capital gains from short-term capital gain or long-term capital gain, it will not exceed 15%. Matlab, we are not supposed to check slab rates for these three incomes, which are the incomes: dividend, short-term and long-term capital gain. So for these three incomes from securities, I'm not supposed to check the slab rates for surcharge. I'm supposed to levy my 15%. Okay. Surcharge on the amount of income tax computed on that part of income shall not exceed 15%. It should not exceed 15%. In other words, surcharge higher than 15% is applicable only on tax on income other than dividend income cover. So more than 15% is applicable only on income other than dividend, short-term capital gain and long-term capital gain from securities. Okay, so for these three incomes, your surcharge amount should not exceed 15%. It should be only up to 15%. Moreover, in case of AOP consisting of only companies as its members, the rate of surcharge on the amount of income tax shall not exceed 15%. Health and education says 4%. Okay. Now coming to old tax regime, where an assessee opts for old tax regime. So what assessee is doing? New tax regime is my default. Okay, new tax regime is my default. Now under new tax regime, you cannot claim any deductions, any exemptions. You cannot claim any benefits. But what is the benefit of new tax regime? There you can get your income tax rates, the slab rates are little liberal. Okay, taxation rates are little liberal. Your taxation rates are little strict. So if an assessee has no deductions, no investments, no exemptions, nothing, that person can opt for new tax regime. Now suppose new tax regime is my default regime. I have deductions, I want to claim that. What I'll do, I'll opt out of new tax regime and I will opt in old tax regime. Where an assessee opts for old regime of taxation, then he should exercise the option in the prescribed manner. So if I want to shift from new tax regime to old tax regime, I can do that. But here there are two bifurcations. What are the bifurcations? Salaried person. Salaried person can shift as many times as he can. Suppose this year I want to jump to new tax regime, I can jump to new. Next year old, I can jump to old. Again new, again old, I can do that. But a person other than salaried, say businessman, he can do that only once a year. So this year I'm selecting, say, new tax regime. One more option I'll have to switch from old or new. That's it. Businessman, that is non-salaried, cannot shift from one regime to other regime. He cannot jump. But a salaried can do that as many times as he wants. That is the additional benefit given to salaried person. So same thing, whatever we discussed, same thing is mentioned here, where the person not having aforesaid income along with the return of income to be furnished under section 139(1) for a previous year relevant to assessment year, he may choose to pay tax under default tax regime under section 115 BSE in 1 year and exercise the option to shift out of default tax regime in another year. Where the person has income from business or profession. So within the due date, under section specified, and it should be done within due date. If you are doing after due date, so if you are doing after 31st July or after 31st October, okay, if you are doing after these period, so in simple words, after due date, then you cannot go for shifting. New tax regime will become your default regime. So it should be done before due date. Okay. So if you are doing before due date, then only this option is available of switching on. Otherwise, this option is not available. Now, in that case, following tax rates are applicable. So suppose if you are going for old tax regime, okay, then you have individuals, HUF, association of persons, body of individuals, artificial juridical persons. So in those case, suppose senior citizen, super senior citizen, that is above 80 years, 80 or more than 80, up to 5 lakh rupees your income is exempt. 5 lakh to 10 lakh 20%, 10 lakh and above 30%. Then you have senior citizen, 60 or more than 60 years of age is senior citizen. So up to 3 lakh it is exempt, 3 lakh to 5 lakh 5%, 5 lakh to 10 lakh 20%, and 10 lakh and above 30%. In case of individual HUF, association of person, body of individuals, artificial juridical person, up to 2 lakh 50 nil, 2 lakh 50 to 5 lakh 5%, 5 lakh to 10 lakh 20%, and 10 lakh and above 30%. So these are three different slab rates according to the age. Whereas in new tax regime, there is only one slab rate irrespective of your age. Okay. Applicable to all individual, artificial juridical person, AOP, BOI. Okay. Here also you have a rebate if your income is more than taxable limit, but it is less than 5 lakhs. Then you claim your entire amount as a rebate, whatever is your tax amount as rebate, but the limit is up to 12,500. So the tax amount or 12,500, whichever is less. Share on tax, a surcharge on tax after rebate under section 87A. So here also you have surcharge, under this also you have a surcharge. So surcharge at the following rate is also payable on tax as computed above rebate under section 87A. So total income does not exceed 50 lakhs, nil. Total income exceeds 50 lakhs but does not exceed 1 crore, 10% of tax. Total income exceeds 1 crore but does not exceed 2 crore, 15% of tax. So more than 50 lakhs but less than 1 crore, 10% of tax. See, here you are calculating on tax. Okay. So that 5 crore, up to 5 crore you have here, and here it was surcharge limit was up to 2 crores. So that is also a major difference between old and tax regime. Again here 15%, that condition is same, the surcharge on dividend, short term capital gain and long term capital gain, the surcharge amount is 15, limit is 15%. Health and education says 4%. Okay. Then we have firms, LLP. So for them the tax rate is 30%, flat 30%. Okay, flat 30%, whether partnership firm or LLP, no slab rates. Surcharge is 12% if your income is more than 1 lakh. Otherwise, 1 crore, sorry. If your income is more than 1 crore, the surcharge percentage will be 12% of tax. Marginal relief is available here. Health and education says 4%. Same thing applies to company in case of domestic company and in case of foreign companies. In case of domestic company, if my turnover for 21-22, previous year 21-22, if my turnover is up to 400 crores, then the tax rate will be 25%. In any other case, so in case of small company, small domestic company, my tax rate will be 25%. In case of domestic company, 30%, and in case of foreign company, 40% tax rate. Okay, and again the surcharge for domestic company it will be different, and for foreign company it will be different. Marginal relief is available here. So there the marginal, under new tax regime marginal relief was 7 lakhs. Under old tax regime marginal relief is 100 lakhs. Okay, 100 lakhs or 1000 lakhs. If it is above 100 lakhs or above 1000 lakhs. Okay. So here they have mentioned in under this 115 BAC, in this point they are mentioning that whether individual HUF, if you are opting for 115 BAC, that is new tax regime, you have to obey new tax regime slab rates, and if you are opting for old tax regime, you have to obey old tax regime slab rates. That is mentioned. Okay, I hope you are comfortable with the lecture. The amendments are very easy, very important, can help you to fetch very good marks. Thank you.